Hi everybody and welcome back. I am Jenny and today we are going to explore some differences between an S-Corp and an LLC or PLLC. And this is all having to do with starting a small business and different kind of small business types, if you will, that you could look at choosing for yourself. Reminder, I am trained as a therapist and as a clinical supervisor. And for the purposes of this video and all the other videos in this channel, I'm not those things. I'm also not a lawyer or an accountant. So I'm just hoping to provide you some helpful information to give you guidance as you figure out how to start a private practice. And if you do find that this information is helpful to you, please like and subscribe and share so that more people can also find it. So if you are wanting to start up a small business, one step that, in my opinion, is important, no matter what else you do, is to go ahead and separate out your business expenses from your personal expenses and also income. So you can do that by getting another bank account with a checking account, maybe a checking and savings account just for your business, and then maybe also getting a business credit card. And then having every expense, everything that you purchase for your business being done through the business accounts, and then the money that you earn coming in, at least at first, to the business accounts. You can always pay yourself from the business account into your personal account, but that's what I'd recommend doing just to keep things really clean and separate. And depending on how you decide you want to organize your business, you will have to do that step at some point. But it's a good practice, even if it's the only thing that you do. So from there, you may decide that you just want to separate out business and personal income and expenses, and that's it. And that's totally okay. You will need to pay taxes on the money that you earn over and above a certain amount. The last time I checked, that amount was $400 for a year. So the IRS will be expecting you to pay taxes on anything over and above $400 or whatever it is now, dollars, that you make with your small business. This is different from what we're used to with working in schools, right? They withhold our taxes for us. We just get the net pay. We may not really think about, oh, we really earned X amount and they took Y amount out to pay all these taxes. And so it can be a little bit of a shock to the system when you have to do that yourself and you can see, I actually earned this amount, but now I have to take this chunk out and give it to the government. We, as self-employed people, we have to pay both as an employer and an employee for things like Social Security and Medicare. When we're just the employee, our employer pays some of those taxes for us and we don't see it. So it can, again, kind of be a shock to the system and feel like a lot of money is going to taxes. And you want to make sure that you're paying those taxes on at least a quarterly basis. There are deadlines for when those taxes need to be paid, and you may find it helpful to take a little bit out every so often, every month maybe, and set it aside to pay those quarterly taxes so that you don't accidentally spend it and then not have it when you need it. You don't want to have to owe money to the IRS, because if you don't pay it on time, of course, then you have penalties and they charge interest and they can garnish your wages and all kinds of things that we don't want. We're going to go over taxes more thoroughly in another video. But one other suggestion that I would make here is that you could, if you have the option with your payroll department or whatever through your school job, you can see if they would withhold an extra amount over and above what they're already doing for your school job to cover the self-employment taxes. Sometimes you can do that. I was able to do that, and that was helpful. I did the best I could at estimating what I thought I was going to owe, which can be tricky with the private practice, and especially just getting started. It's hard to kind of know for sure what to expect to be making, and then therefore how much you'll have to owe in taxes. But it was helpful to just have somebody else taking care of that, and then I could kind of set and forget it. Though what we just talked about can be important and come into play when we're looking at these options that we're going to look at today. One option could be to set your business up as a limited liability company, and this can potentially add a layer of protection between your personal finances and your business affairs. So it just makes it a little more clarified that in addition to the fact that you've got your money separated, which helps to clarify this is personal, this is business, having an LLC may provide an extra layer of protection there. If someone were to try to sue you, that they may not be so easily able to have access to your personal assets when you have an LLC. And then there's something called a PLLC, which the P is for professional. So we have to have a certain license to practice psychotherapy, and that's what the business is. So you may consider making your LLC a PLLC. I just put it in my name. So when I registered with the Secretary of State, instead of registering Jenny Palo Counseling Services LLC, I changed it to PLLC. And this can be another added layer of protection for you against liability. And then you can also you can set up your business as the PLLC or LLC. And then if you want to do another layer on top of that, you can basically file a special request with the IRS to be taxed as something called an S-Corp. We looked briefly in the last video about how there's C-Corps and S-Corps and sole proprietorships, and it can get very kind of muddled and confusing, but the IRS taxes us differently if we are a sole proprietor versus S-Corp or C-Corp. So here's my understanding of how you can save money on taxes with an S-Corp. Take this with a grain of salt. As I've said before, I'm not a tax accountant, but in either scenario, whether you decide to do the sole proprietor or S-Corp, you can go to your Secretary of State. You can get yourself, your business, registered as an LLC or PLLC, and you can get an employer identification number from the IRS. We'll go over more about how to do both of those things in upcoming videos. And either way, and you can choose to not do either one of those two things and just do nothing, and then you're going to be a sole proprietor. Or you can do those things, either just the Secretary of State filing, or also get an employer identification number. You can still be a sole proprietor. You do not have to be an S-Corp. If you want to be an S-Corp, then you have to do those first two steps, Secretary of State and employer identification number. Either way, if you are a sole proprietor, then you're going to have what's called a pass-through. So that ghost is kind of meant to represent like all the money that you make as a sole proprietor is going to kind of just pass through your business and go straight to your personal piggy bank. You're still going to want to separate out within that personal piggy bank, put labels and make it clear what's the business and what's personal. If you have more than one side hustle, for example, then you're going to want to keep track of where that money is coming from with your accounting and with having different bank accounts and things like that. But it all ends up going to your personal, and you pay your taxes out of that. For the S-Corp, you're going to have first that dollar sign is meant to kind of represent your business. You're going to go put the money that you make through your business into the S-Corp, and then from there, a portion of that is going to need to get paid out in the form of what they call a reasonable salary. And that is something that you determine. One of the kind of rules of thumb that I have heard is to do about 60% of the total of what you're making would be the reasonable income that you would be paying yourself. So you would be the employer on the employer side, paying you as the employee on the employee side. So you're both the employer and employee. That's true as a sole proprietor or as an S-Corp. The difference is, as an S-Corp, you have to actually make it really clear that you are giving yourself a salary, you give yourself a particular paycheck of that money, and you also register with your state and the IRS websites to actually log on a monthly basis or some other time frame if you want to do it every 2 weeks, but that you would say, I am giving myself this paycheck. You have to take out for taxes. So either way, whether you're an S-Corp or a sole proprietor, when you are making money for yourself, that self-employment tax is going to be a little different than what you are used to if you're working as an employee for, say, a school district. You still always have to pay the employee part of Social Security and Medicare. And actually, for many of us, we don't actually pay Social Security for school districts. We pay into a pension. But either way, the school district takes that stuff out, and then we are just left with whatever is our net income on our paycheck. And then we get a W-2 at the end of the year, and we use that for paying our taxes to show what we've already paid and if we still owe anything, or maybe we need to get a refund. But we don't have to do those calculations ourselves. It's done for us, and it's only on the employee side. And then the school district, as the employer, has to pay the employer side. So when we're making money for ourselves and we're not somebody else's employee, then we have to pay that tax still as an employee, but we also have to pay the employer side. So now instead of just paying, as you can see here, 7.65%, it actually doubles because we're paying it on both the employee and employer sides. So what this would look like in our sole proprietor versus S-Corp examples, let's say that we make $100,000 in a year with our private practice. Then with the sole proprietor, that money is all going to pass through and it's all going to go to our personal, that's how we're going to pay the taxes, is from our personal. Keep in mind that if, let's say, you have a spouse and they make a certain amount of money, maybe as a W-2 employee, or however that works, that's going to get included. If you have investments, if you own property, all of that is going to be included in your total of what you're going to have to pay in taxes. But for this $100,000, that's the part that you're going to have to pay the self-employment tax of that little over 15%. It's like 15.3%. And so 15.3% of 100,000 is going to be 15,300. That's going to be the amount of taxes that you would have to pay for Social Security and Medicare just for that money that you made for the private practice. And you're also going to have to pay income taxes on things, but that's just the Social Security and Medicare part. Then for the S-Corp, instead, we look at that. The $100,000, it goes to the S-Corp business. It all goes through that and stops there. And then you have kind of two different places that it goes. That you give yourself a reasonable salary, and let's say you give yourself 60% out of the total 100,000, so 60,000. And that is what you're going to pay the employee-employer taxes on. And then the rest of it is going to be shareholder dividends. It's going to be taxed at whatever your income tax rate is, but you're not going to have to pay that Social Security or Medicare tax on that part of it. So you end up paying a little over $9,000 for that instead of the $15,300. And in that way, you can just see the difference in how much you have to pay in the taxes. Even if you have to pay $2,000 or even $3,000 to a tax accountant in order to file your S-Corp paperwork, do your payroll, and take care of your taxes for you that are going to be a little more complicated with an S-Corp. So you're going to have to pay more money, or you're going to have to take up more of your time to do that if you want to do that. But even still, you'd be saving a few $1,000s. Now, this would change if instead of making $100,000, you made, say, $25,000. It might not be worth it in that case, because the amount you have to pay the CPA or tax accountant is perhaps still going to be $2,000-$3,000. So maybe that's a way to kind of figure out if this is worth it to you or not. But in theory, this is my understanding of how an S-Corp can save you money on taxes. So when you set yourself up as an S-Corp instead, or set your business up, I should say, as an S-Corp, you have that much more of a clear delineation between you as a person and then your business. So there are some pros and cons to being taxed as a sole proprietor versus S-Corp. The S-Corp, as I said, is a bit more complicated. There's extra forms that need to be filled out and filed, both at the beginning of the year to the IRS, and then also each month and quarter for payroll purposes. So that's the part where payroll becomes a little more complex. I originally thought that all there was to doing payroll was just figuring out what you were going to give yourself as a reasonable salary, and then pay that amount to yourself, minus the taxes that you would owe. But there's a little more that goes into it. You have to set up accounts and pay these different, government entities, different amounts of money. So I just have someone taking care of that for me. But when it comes time to file your taxes each year, you're going to have, for an S-Corp, you'll have something called a K-1 form that you have to fill out as an employee, and then you do a separate form for the S-Corp in addition to your personal tax filing. So the S-Corp, the business, would have its own kind of taxes to have to get taken care of. Another reason why I decided to get a CPA. And I don't want to get too far into the weeds and make things more complicated than they need to be, especially since I am not an accountant. There's more to learn about S-Corps. I'm going to link an article from a company called Herd that you can check out. And this company is there to help with payroll, bookkeeping. I think they outsource the tax part of it, but they will help to take care of that. And they are just for therapists, so that may be a helpful resource. And they are nationwide, so that is one potential option of many. I don't want to, say that they are the ones that I am telling you to go with necessarily, but just they are ones that I've heard about. So in our next video, we are going to talk about the employee identification number, what that is, and how to get it set up. Don't worry, it's not super complicated. And if you did find anything in this video useful, please like and subscribe so others can find it as well. And share it if you'd like to share it. And then also feel free to share comments, feedback, what else you would like for me to be doing to help you out here. Until next time, remember, you have options and opportunities. I'll see you soon.